In overnight trading, US shares rallied again, and the consecutive rallies we've seen in US trading means that the share markets have returned to the point they're at before the introduction of tariffs on Liberation Day, as President Trump called it. And at the 100-day mark of the Trump administration, markets have done a round turn. They've got back to the levels they're at before the introduction of tariffs, and only a few percent below where they were at the November 5 election date. And that round turn for markets has been marked by both highs and lows across sectors and around the globe, dragging global markets with it. Good morning, everyone. I'm Michael McCarthy, CEO at Moo Australia, and today I'll be looking at the overnight action and what it might mean for trading in the Asia-Pacific region today. And the NASDAQ is the first port of call for most of us in the morning, given the dominance of the Magnificent Seven stocks in that index. And here's the chart that shows that round turn since the Liberation Day introduction of tariffs on April the 2nd. And you can see that after a sharp sell down on the left-hand side of the chart, markets have rallied back quite strongly and bring us back to almost the level we were at. But you can see that the climb was much more steady and took longer than that very sharp sell-off. There is a potential view, particularly given that volatilities remain higher, that risk is still very high, but there's certainly plenty of optimism in the market that might be running counter to some of the facts that we've seen recently. And while the headlines are focused very much on Amazon's moves overnight to put forward the costs of tariffs on its invoices and a scathing reaction from President Trump, that obscures the fact that we also heard from the OG of US car manufacturing, GM, and the CFO at GM at their quarterly earnings report pointed out that they were very concerned about the outlook for the rest of the year, and so concerned they weren't prepared to give any earnings guidance whatsoever. The CFO spoke to the uncertainty that tariffs have introduced, and that lack of guidance made it very difficult for investors to judge the outlook for GM, but also the impact of tariffs across the automotive industry. And no doubt last night's rally was partly due to the fact that some of the automotive tariffs were lifted, but it's still very unclear, at least to one of the experts in the field, as to what the implications of the tariffs might be over the course of this year. And the other major development was the news from Shanghai that President Xi was reiterating commitment to the global south, that is the BRICS nations that he's been speaking with recently, and has urged to stand firm against what he terms is US bullying. And that commitment to standing firm suggests that the resolution to the trade dispute at the moment might not be as close as markets are reflecting. And when we add in the fact that oil and copper both fell in overnight trading, these key industrial inputs suggesting that industrial sentiment is not strong, the optimism in the markets is a little hard to explain in light of the action and the developments we saw in the overnight action. So turning to the Asia-Pacific markets today, we do have an inflation read in Australia today. Now, the key here, of course, is the trimmed mean, that core inflation reading that we know that the RBA focuses on when it looks at interest rate settings and monetary policy settings generally. So if that core inflation rate comes in line with expectations, that is, it falls from the previous quarter from 3.2% to 2.9%, we're likely to see a fairly neutral reaction in markets because that would be in line with forecasts. Now, if the trimmed mean comes in lower than 2.9%, we could see some positive developments in the share market, and that will relate very much to interest rate expectations. And you can see in this snip from Bloomberg this morning that there are expectations in interest rate markets that will see a reduction of more than 1% in the cash rate over the remainder of this year. Down the left-hand side, you can see the dates of all the meetings of the RBA Market Committee. And down the right-hand side, you can see the interest rate that is implied by futures contracts at the moment for those future meeting dates. And the market clearly expecting a lot of rate cuts over the course of the year, whether they're coming in 1/4 or 0.5% slices. These expectations are very dependent on inflation. And that means that if the inflation rate comes in lower than expected today, we might not see a huge reaction. How many more interest rate cuts would you like to price this year? Whereas if we do see core inflation higher than expected, the taking back of some of the expectations of interest rate cuts could see a lot of pressure on shares in trading today. So something to watch out for mid-session. That release of the inflation data could shape the trading in the Australian share market today.